The privacy sector has demonstrated the largest growth year-to-date across the entire crypto market, up over 237%. That is the data staring us in the face. Yet, when you look at the chart for COTI, it looks like it has been left for dead. Most retail investors look at that divergence and see weakness. They see a token that is lagging, and they walk away. But if you have been in this market as long as I have, you do not see weakness. You see an efficiency gap. You see a mispricing. We are sitting at a historical support level that dates back to 2020. The risk-to-reward ratio here is arguably one of the best setups in the altcoin market right now, provided you know exactly where your invalidation level is. Today, I'm going to break down why the fundamentals of COTI, specifically their pivot to privacy layer 2 infrastructure, are finally catching up to the narrative. Then, we are going to open up the 2-week chart, which is the only time frame that matters for a move this big, and I will show you exactly where I'm buying, where I'm placing my stop loss to protect my capital, and the 3 specific price targets I'm aiming for in the coming weeks. Let's establish exactly where we stand. COTI is currently trading between 2 and 3 cents. For the average moonboy on Twitter, this is boring price action. But context is everything. If you look at the left side of the chart, this 2 to 3 cent region is the exact same launchpad we saw back in October of 2020. We have effectively completed a full market cycle round trip. Now, I want to address the elephant in the room. Back on November 4th, I shared a setup on this channel where we identified this same accumulation zone. If you took that trade with me, you know we hit our first take-profit target at 6 cents on November 9th. We secured profit. Since then, the market flushed. The price has returned all the way back to our entry zone. If you missed that first move, the market has just handed you a second ticket at the exact same price. This happens rarely. Usually, when a train leaves the station, it is gone. But because of the broader market correction, we are testing the bottom of this range again. The sentiment here is terrible. Holders are exhausted. But as we know, maximum financial opportunity is born in the depths of maximum despair, provided the fundamentals have not deteriorated. And that is the twist. While price is down, the fundamental engine has actually accelerated. Why do I care about a payment network in 2025? Because COTI is not just a payment network anymore. They have pivoted to become a privacy layer 2 on Ethereum. Look at this comparison chart on the screen. The market is obsessed with zero-knowledge proofs, or ZK rollups. But COTI is utilizing something called Garbled Circuits. I won't bore you with the computer science degree, but here is what matters for price. Garbled circuits allow for privacy that is faster and lighter on-chain than ZK proofs. It is scalable privacy. As the team stated, privacy tech exists, but adoption only comes when it is fast and easy, and we are seeing proof of this adoption. PriveX, a platform built using this infrastructure, just crossed $1 billion in total trading volume. That is not a testnet promise. That is real volume flowing through the ecosystem. On top of that, the COTI Earn platform has now crossed 100,000 participating wallets. They have launched Season 2, allowing users to deposit assets like wrapped Bitcoin, Ethereum, and USDC to earn rewards. Actually, looking at the data, you can currently earn over 50% APY just for holding USDC on the COTI network via the Hyperlane bridge. That is an absurd yield for a stablecoin strategy. Now, finding these yield pockets is exactly how I built my portfolio during the last bear market. It is not just about buying tokens, it is about putting your idle assets to work. If you want the complete breakdown of how I farm these yields and the specific platforms I use for staking and liquidity provision, I have compiled all these tactics in my DeFi guide. It is available in the pinned comment below and costs less than a cup of coffee at $5. It is a straight-to-the-point playbook for passive income. Back to COTI. Institutional visibility is also ramping up. The team had a strong showing at Binance Blockchain Week, and here you see their chief strategy officer standing next to Richard Teng, the CEO of Binance. While a photo isn't a partnership, in this industry, proximity is power. They are in the room with the decision makers. Let's shift to the charts, because the narrative means nothing if the price action doesn't confirm it. I'm looking at the 2-week time frame. This filters out all the daily noise and shows us the true trend. The first thing you will notice is this massive descending channel marked by these orange lines. This structure has been dictating price action since the all-time high of 68 cents back in October 2021. We are still trapped inside it. Until we break this upper orange line, the macro trend remains bearish. That is just a fact. Inside this channel, notice the dotted orange trend line. Since the local top in December 2024, price has been rejected by this steeper trendline repeatedly. However, we are now squeezing into the apex between this descending resistance and our horizontal support at 2 cents. When price squeezes like this, volatility is imminent. Now, look at the moving averages. We are currently trading below the 10, 21, 55, and 100 EMAs. These are the blue, yellow, and purple lines you see acting as a ceiling. This confirms that the bears are still in control. We need to reclaim the 10 EMA to get any semblance of bullish momentum. However, let's look at the indicators. The Fibonacci RSI at the bottom of the screen is flashing deeply oversold and is starting to curl. Historically, when the momentum oscillator gets this low on a 2-week chart, it often precedes a significant relief rally. Also, look at the volume profile on the left. The point of control, the price level with the most traded volume, is sitting up at 5 cents. Price acts like a magnet to these high-volume nodes. If we bounce here, 5 cents is the first natural gravitational pull. So how am I playing this? I'm not guessing. I'm executing a level-to-level plan. I'm aggressively accumulating in this green box between 2 cents and 3 cents. This is my load zone. I want to buy when everyone else is selling in fear. Now, the stop loss, and this is critical. I'm placing it at roughly 1.8 cents. This is just below that liquidation wick we saw on October 10th. If we get a weekly candle close below it, this structure is invalidated. At that point, the price could easily flush down to 1 cent, the all-time low. I will not hold a bag through that. I'll cut it, take the small loss, and look to reaccumulate lower. My take-profit targets. Using the Fibonacci retracement anchored from the 19-cent high to the 2-cent low, I have mapped out 3 targets. Target 1 is 6 cents. This aligns with the 236 Fibonacci level. We hit this perfectly in November. If we get back there, I'm taking profit on 30% of my position and moving my stop loss to my entry price. This makes the trade risk-free. Target 2 is 8 cents. This is the 382 Fib level and a structural resistance zone. Target 3 is 12 cents. This is the big one. It aligns with the 618 Fib and, crucially, the top of the macro descending channel. If we hit 12 cents, the entire bearish structure is being tested. If we break above 12 cents, I will leave a moon bag, roughly 15% of my position, to run, just in case we enter a full parabolic phase. Here is the strategic reality. This is a make or break moment. We are standing on the edge of a cliff at 2 cents. The bull case. Privacy season ignites, COTI catches up to the sector's 200% growth, and we reclaim the moving averages. We see a rapid move to 6 cents, followed by a grind up to 12 cents. The bear case. The general market corrects further, Bitcoin drops, and COTI loses the 2-cent support. In that scenario, we get stopped out. I'm taking this trade because the risk is defined. I'm risking a drop of maybe 15% for a potential upside of 300 to 500%. That is a probability bet I will take every single day of the week. I'm keeping my allocation to a maximum of 3% of my total portfolio. This is an asymmetric play, not a retirement bet. COTI is undervalued relative to the privacy sector, the tech is being adopted, and price is sitting at multi-year support. Oh, and I noticed it just got listed on MEXC with 0 fees, which is great for volume. If you are looking for an exchange to trade this setup, I have a link to them in the pinned comment. It is not sponsored, but using that link helps support the channel and can get you a deposit bonus. So this is a trader's market right now. You have to be precise. If you want to stay updated on this trade in real time, specifically if I decide to cut or add to this position before the next video, make sure you join the Telegram community. The link is in the pinned comment as well. If you enjoyed this data-driven approach, I recently did a deep dive on Polkadot, which has a very similar market structure. Check that video out right here on the screen, besides my last COTI one. Thanks for watching, never financial advice, and I'll see you tomorrow.